Start the recording. Okay, great. Good afternoon, everybody. Hey, thanks for logging on. It's nice to see some familiar faces. Welcome. You are hopefully joining us for the New York Wine Grape Foundation's webinar on what employers should know about COVID-related tax credits for paid leave. We're really happy to have you all join us today. I probably know most of you. This is Val Ross from the New York Wine and Grape Foundation. Again, we know your time is very valuable and that our current environment is unprecedented, to say the least. So the fact that you're joining us, we really value that, and we're glad that you're here. The foundation team has definitely been working hard to provide our members and the wine community and the grower community in general with access to tools like these webinars. And we want to connect you with knowledgeable experts like our speaker today, Liz Miranda. And it's really great to have Liz with us. Liz is with Miranda Tax Consulting, LLC, and it's her company. And she serves businesses and individuals in various industries with a specialization in the wine and craft beverage industry. And many of you probably know her from different positions she's been in. Prior to starting her own business, Liz did spend 10 years with a large regional firm and then 2 years at a small local firm. She is a member of the Association of International Certified Professional Accountants, earning her CPA license in 2010. And Liz does enjoy speaking at the annual Bev New York conference, and she has served on various nonprofit boards, most recently the Canandaigua Wine Trail, as well as the Madrigalia and Webster Theater Guild board. So Liz, welcome again. I know you're already sharing your screen with us today. And our participants are in listen-only mode so that we're gonna have a clean recording to share with everybody afterwards. But we'd really still love for everybody to enter their questions. If you take a look at the bottom part of your screen, you'll see a Q&A box. If you just click on that button, you can enter your questions there. And Liz, I will definitely help you field those questions as they come in. And I'm sure that we'll have some other folks join us along the way, but if you want to get started, I know it's a couple minutes after 2 o'clock, I'll hand it over to you.
Thank you, Val. Welcome, everyone, and thank you again for joining us today and taking the time. This is an interesting time to be talking about brand new tax law. Because you usually don't handle changes mid-year that affect you as you're going through them, but this is what the situation we're in. So what I put together today is, it's drawn from a number of sources. It's focused in on one of the payroll tax credits available and one of the relief efforts that's been put in place for assistance to small businesses during this really interesting time. And so I'll get started. I welcome questions throughout, and we definitely should have time for questions at the end as well. So I'm going to go ahead. And, Val already did a great introduction. Thank you, Val. So as she said, total of 12 years in public accounting. I've started my own tax practice, tax and consulting, in the fall of 2019, and my firm's a business associate member of the New York Wine and Grape Foundation, and I'm also a member of the AICPA, and I included my contact info for you here. Please feel free to reach out with any questions following this. I'm happy to help. That's really my goal today, is to help clear confusion. And I think Val already said this is unprecedented. We're in unprecedented times. We have new tax acts and new legislation, and normally a new tax act would be proposed, and then it would be refined, and then the IRS would have time to interpret it and produce their guidance. and we skipped all of that. We accelerated all of it. It happened instantaneously. So we're catching up now on the interpretation and the guidance, and really no real opportunity to refine because they passed it and it's in place. So this is what we have to work with. And what I'll present today is the understanding as of right now, and it could change. That's what we're learning is the only thing constant right now is change. A quick agenda. I want to give you an overview of what I'll be talking about today, a glossary of some of the terms that are going to pop up pretty frequently. The two main pieces are the paid sick leave and paid family leave. So what does that entail? Then the tax benefits available to employers that are paying sick leave or family leave, and then we'll actually go into examples. So in terms of what this is all about, the Families First Coronavirus Response Act, I'm just going to call it the Act. It's requiring certain employers to provide their employees with paid sick leave or expanded family medical leave for a variety of reasons that are related to COVID-19. So the Department of Labor has a wage and hour division. They're the ones administering and enforcing paid leave requirements. But when we get to the tax credit section, the IRS is handling the tax credits. And the provisions in this act are in place from April 1st of 2020 to December 31st of 2020, okay? So we're in the early stages of the effective period for this act. So in the shortest explanation I can give, to ease the burden on employers, there's a payroll tax credit that was formulated, and it's going to shift the cost of paid sick and family medical leave off of the employers. It's by creating a tax credit that they can claim. And the credits are going to be calculated on eligible wages. These are wages paid as leave between those same dates, April 1st, 2020 and December 31st of 2020. So I mentioned before, Department of Labor is in charge of the leave requirements. They're administering and enforcing these new paid leave requirements. Now, family medical leave has been expanded. Part of what they did is they expanded to include emergency family medical leave. And they also added the phrase telework, hot phrase right now, when it comes to the ability for an employee to do work. So that's very important in terms of whether somebody qualifies for leave. And then, as I mentioned, the IRS is in charge of the tax credit part of it. So into our glossary now. First, I want to talk about a refundable credit. A tax credit, is a dollar for dollar reduction in tax, okay? Now, a non-refundable credit would be that you can reduce your tax to zero, and that's it. You can't go any further. A refundable credit means you can reduce your tax to zero and further and get an actual refund, get cash back, even if you've already zeroed out all your other taxes. Okay, so we are talking about a refundable credit, reimbursement dollar for the cost of providing paid sick and family leave wages to employees for leave related to COVID-19. Covered employers, couple big things. Employers with less than 500 employees that are required to pay sick leave, okay? We'll get into who's required to pay a little bit, but this is really up to connecting with the Department of Labor and their wage and hour division to determine if a business is required or might be exempt. And I will mention some of the exemption options. Telework. I took this right from Google, the practice of working from home, making use of the internet, email, and the telephone, okay? So telework is that new phrase that is, really a big part of our vocabulary right now. Then we have employees, eligible employees. Who's eligible? Okay, we have a full-time employee is eligible for up to 12 weeks of leave at 40 hours a week. Now, 12 weeks is really 2 weeks of sick leave and then 10 weeks of family medical leave. And I'm going to show a bunch of different examples and details surrounding that. What does complete coverage mean? It means that the employers are getting 100% reimbursement for that paid leave. And we're going to go through some calculations. If you are not required to pay sick leave or family medical leave under the Department of Labor rules, you do not get reimbursed for the sick or family leave that you pay, okay? This credit doesn't apply. And so there's some exemptions from having to pay leave, and we'll briefly talk about some of that. How do we know if we're required to pay? So we've got the Emergency Paid Sick Leave Act. We've got the EMFMLA Act. And these are the authorities that, that put together the requirements for paying sick and family medical leave. So if you don't know for sure if you are required to pay, get in touch with the Department of Labor, the Wage and Hour Division specifically. And I do have some links at the end of this presentation that will get you right to their department's website for New York State's Department of Labor Wage and Hour Division to start reading through some of the information that they've put out. One important example of an exempt employer, this is an employer that does not have to pay leave. And that is a small business with fewer than 50 employees, which can affect a lot of businesses, when the imposition of such requirements would jeopardize the viability of the business as a going concern. So that's a big thing, and it's a little nebulous, right? What does it mean? Jeopardize the viability of the business as a going concern. Is it going to put this company out of business to allow employees to go on leave? And it's not that they don't have to pay them, but maybe that person that needs to go on leave is so necessary and key to the business that they can't function, and they're honestly going to have to fold as a result. So there's a lot more behind that exemption explanation, and that's where you'd want to talk directly to the Department of Labor on that one. Okay, so what reasons qualify people for leave? We have the act that has 6 categories that qualify people for leave. And so I've got these verbatim for you. We've got paid sick time, and then also the family leave time. So these employees are unable to work or telework due to a need for leave because, 1, they are subject to a federal, state, or local quarantine or isolation order related to COVID-19. So they have actually been told that they need to quarantine. Whether it's a general populace one, there's a bit of interpretation here. 2, they have been advised by a healthcare provider that they specifically need to self-quarantine related to COVID-19. 3, they are experiencing symptoms and are seeking a medical diagnosis. 4, they are caring for an individual that falls into categories 1 or 2. Okay. 5, this is a big one that came out because of schools closing. They are caring for a child whose school or place of care is closed or childcare provider is unavailable for reasons related to COVID-19. So that is anybody with a child under 18 whose school is closed, does not have other sources of care, and is unable to work. And number 6 is fairly vague, a little bit of a catch-all, is experiencing any other substantially similar condition specified by the Secretary of Health and Human Services in consultation with the Secretaries of Labor and Treasury. So if something doesn't fit into the previous 5 categories, there's probably a little more digging involved, but this is designed to really capture some of those categories or scenarios that they really weren't able to think of when they were writing it. So for category 5, this is where someone is caring for a child. What they do is the first 2 weeks, they are actually getting the sick leave portion, and then they follow it with 10 weeks of paid family and medical leave. So I'll show you in a chart, but a reminder that This is for an employee who is unable to work or telework due to a need to leave for care for their son or daughter under 18 years of age. So school or place of care has been closed. Childcare providers unavailable, and this is due to a public health emergency. And I want to point out one frequently asked question that I saw that came out. Somebody asked, if you have two parents at home caring for a child, one is unable to work, but the other was already an at-home care provider. You know, they already maybe were a homemaker, weren't working, etc. Can the other parent that is now home claim that they are eligible for leave? Well, no. If an additional parent or provider is available, then you can't claim it just because you're in that situation. So that's one question that came out. So the duration of sick leave and family leave, categories 1 through 4 and 6, that's 80 hours of leave, that's 2 weeks, okay? Or the average number of hours worked over a 2-week period for a part-time employee. And then number 5, it's a total of 12 weeks, 40 hours a week. And again, if it's a part-time employee, it's their average number of hours a week that they're normally scheduled to work over that period. And I am going to go through some examples just to illustrate it a bit better. And again, I just wanted to include the actual language here for the family leave piece. It's 2/3 the employee's regular rate of pay when they're unable to work. So a little repetition here, but the actual language sometimes rings a little clearer. Let's calculate it. Let's do some numbers. And I'll make it look more like a math problem on a few slides from now. But for categories 1, 2, and 3, they're going to get their regular rate of pay or the applicable minimum wage, whichever is higher, up to $511 per day, total of $5,110. So that's a 2-week period, standard 5-day work week. For leave reasons 4 or 6, they're going to get 2/3 their regular rate of pay or 2/3 the applicable minimum wage, whichever is higher, limited to $200 a day and $2,000 in the aggregate. So categories 1, 2, 3, 4, and 6 are all just over a 2-week period. And then category 5 is the 12-week period, the extended period. But that too is limited 2/3 of their rate of pay or minimum wage, whichever is higher, up to $200 per day and a grand total of $12,000. That's the highest we can go for approved leave for family and medical reasons. And so that's the most any employer can pay someone in that scenario, and that's the largest wage credit they can get. And just to clarify, there are 4 technical credits available. We have employers paying sick leave and employers paying paid family leave. We saw there were 2 different calculations. And then we have self-employed that can qualify for required paid sick leave and required paid family leave. And I'll touch on that at the end because it's a little different. So I find this slide to be the most helpful. And on the left, we have our categories down each row, category 1, 2, 3, 4, 5, and 6. We have what their basic rate of pay is, whether it's regular pay or 2/3 of the regular pay, okay? Then the limitation. So categories 1, 2, and 3 are $511 a day. And those are really the most severe. These people are technically probably ill, okay, that are getting $511 a day versus categories 4, 5, and 6, where it might be to care for an individual who is ill or care for a child. And those are limited to $200 a day. And you'll see in category 5, that's where we get the maximum number of days, 60 days and $12,000, $2,000 of sick leave, $10,000 of family medical leave. Okay, so they get combined. And again, please send any questions in and stop me at any time.
Hey Liz, this is Val.
So
there is a question.
Yeah.
So, just going back to,
Great.
and I hate to go back, but going back to whether or not you're exempt, like whether this, if you can take this credit. So a lot of wineries may fall under that category of like 50 employees or less, but that
Right.
bold part that you put in there, I know you said call the Department of Labor. Is there any place you could, is that website maybe have like qualifying questions, or what should you be thinking of? You know, are there some other things that you can add in terms of what might like disqualify you or exempt you from this?
You know, there's a lot of different really specific scenarios that can come up. So I can certainly zero in on the additional language that their website did have available. Now, the IRS put out a frequently asked questions piece that I'm going to reference a number of times today. The Department of Labor has something slightly similar where they're fielding questions that are coming in, and that's getting updated. So I recommend certainly reading through what's gotten submitted, and I have a link at the end
Okay.
directly to the Wage and Hour Division website, to their pandemic section. And so that would get people right to those questions about figuring out if they're exempt.
Great.
So that's definitely a good starting point. In terms of other specific examples, I don't have a great one right now, because everybody has such a unique situation. It's tough to even, speculate, as I don't want to
Sure.
provide an example that someone might try to see if they're going to match up to, but it might be, there might be qualifying reasons that are misleading. So,
Right. Oh, the websites are good resources. Thanks.
Yes, they are good resources, for sure. But thank you for asking. Okay, so, all right. So the employer tax benefit, there's 4 portions of this. There's the payroll tax credit, and what that means is that the wages paid for sick leave can be claimed as a tax credit against other payroll taxes. I'll get into that. Health insurance, applicable health insurance that's allocated to the specific employee's wages, that can be claimed as a credit. There's no Social Security tax on required sick pay. That's the 6.2% employer share. That's not required. And then there's a credit for the Medicare tax on required sick pay. That's the 1.45% employer tax. So it's still required to be paid, but then the employer gets the credit for it. And I'll review all of that. I've got more slides on those. So we're going to go through some examples of how to calculate how much leave an employee is eligible for, how much wages they're eligible for their leave, okay? We're going to make a couple of assumptions. They have been employed for at least 30 days. These employees are eligible and have been employed for at least 30 days, and the employer is eligible. They are under 500 employees, and they are required to pay leave. So we're making those assumptions with these examples. Okay, Jackie is employed by a winery. She is advised to self-quarantine by her provider for 14 days. That's category 2 for Jackie. She self-quarantines from April 3rd to the 16th, and she is unable to work or telework. Her regular pay is $75,000 a year, her annual pay. We're going to break that down to daily regular pay of $312.50, okay? That's her average workday pay. Well, she's under the limit of $511 a day. Good. She's affected for 14 days, but the limit is 10, okay? So her employer is going to pay her sick leave of 10 times that $312.50 per day, so $3,125, plus prorated health insurance and the Medicare tax as well, which I don't have typed in here, but that's included. Slightly different example. Tom is employed by a vineyard, and his daughter's elementary school closed on March 16th. It is closed for the remainder of the school year. I mean, we're talking over 90 days here, and he cannot work or telework because he's caring for his daughter. His regular rate of pay is $50,000. His daily pay, we've calculated to $208.33. Okay, that's how much he makes a day. Now, for this category, we're in category 5, the 2/3 limit comes into play, okay? So 2/3 of his daily rate of pay is what he's eligible to get. It's $139.58 a day. He's under the $200 a day limit, so that's good. He's affected 90 days, but there's a 60-day limit on this. So his employer is paying sick leave 60 days times that 139.58, so $8,374.80, plus prorated health insurance and Medicare tax. Another one, Mike. His daughter's elementary school also closed March 16th. Same scenario as Tom, closed the remainder of the year, cannot work or telework. He's doing a bit better though. His regular pay is $136,000. He's doing pretty well. So his daily pay is $566.66 a day. Again, we apply the 2/3, $379.67. He's way over the $200 a day limit, so he's limited. Okay, he's taking a hit to $200 a day, and while he's affected for 90 days, we've got the 60-day limit as well. So he's getting the maximum amount available, and that's the $12,000, $200 a day for 60 days, plus prorated health insurance and Medicare. When I add those in, that's in terms of the credit. He's not receiving those additional amounts, but that's part of the credit that the employer can claim.
Hey, Liz, I don't know if this
Yes.
is the right place to ask it, but we had a specific question about paying certain types of employees. So if an organization, if a company paid a category 4 individual at their normal rate of pay, rather than the 66%, the 2/3, and the $200 maximum, can they still take the tax credit for the $200 per day maximum, or is that individual salary completely ineligible for credit?
Good question. Huh. I would guess they would still be allowed to take the credit for the allowed amount, but I'm not 100% positive. I'm happy to look into it. And Val, if you want, I could send you the answer to send back to the person who asked the question.
Yeah, we'll connect and maybe we can get the two of you together, or whatever is easiest for you guys. Yep.
Yeah, I'd be happy to look into that. Great question.
Thank you.
Yep. Okay. I wanted to dig into the qualified health plan expenses because this is part of the credit for the employers. So in true technical terms, amounts paid or incurred by the eligible employer to provide and maintain a group health plan as defined in section 5000B1 of the Internal Revenue Code, and that are allocable to the employee's qualified leave wages. So I took this right from the IRS frequently asked questions number 9 that they issued on March 31st. Section 5000B1 of the Internal Revenue Code. There were a lot of frequently asked questions about health plan expenses and different types of plans. This gets very, very granular. It's a bit too much to dive into today. So I can certainly send out the IRS frequently asked questions. There's a great PDF that they produced, and I can provide that. And it's publicly available as well. But it's worth a read for somebody who feels that their current health plan might be unique and have some interesting caveats to it. So I'm happy to send that out if there's additional clarification needed. So we've got qualified health plan expenses. Let's assume we've got qualified health plan expenses. Yes, self-insured plans are included. Pre-tax salary contributions are included, according to the frequently asked questions, after tax or not. But probably the biggest thing is for S corporations, greater than 2% shareholders, their health insurance costs are not included, okay? And this is pretty common. S corp shareholders, greater than 2% S corp shareholder health expenses get singled out a lot for tax purposes, but so those are not a part of this in terms of qualified health plan expenses. And then how do we allocate it? It says use any reasonable method to allocate it. Great. What's a reasonable method? Any guidance? And provide support if requested. Okay, great. So we want a method to allocate to these employees' wages an appropriate amount of healthcare expenses. So let's do an example. We got Linda. She's an employee of an S corporation. She's not a stockholder. She has qualified for 10 days of the sick pay credit. And then her S corp's got annual health insurance. It's paying $8,000 a month and it's covering 15 employees. So we've got 15 employees for a total of $8,000 a month. That's $533.33 per employee per month that this S corp is paying health costs. We're going to assume we've got 4 weeks in this month, 20 work days, keeping it simple, right? 5 days in a week. So average amount per employee per day is $26.67. That's that $533.33 divided by 20 days. So the credit for Linda's sick pay is increased. We've got that $26.67 multiplied by the 10 days that she's qualified on leave. And so her credit's going to increase by $266.67. That's not increasing her pay. That's the credit for the employer. Okay. Social Security tax. This is not a credit. It's just a reduction in costs. The employers are not required to pay their share of Social Security tax on the sick and family medical leave pay. So for instance, Sarah gets $10,000 of sick or family medical leave. Her normal Social Security or FICA would be 6.2% of that, so $620. Under this act, it's zero, okay? So the employer is not paying Social Security on sick or family medical leave wages. Medicare, however, is still being collected. That's the 1.45%. Because employers are not required to pay Social Security, there's no credit, they're just not required to pay it, okay? But for Medicare, which is still being paid, they do get that back as a credit. So another example, sick leave of 10,000, sick or family medical leave of 10,000, paying 1.45% of that, so $145. That goes into the credit, $145 credit involved with that calculation. Okay. So I mentioned earlier that self-employed can qualify for the credit. It's a comparable credit for self-employed individuals carrying on a trade or business, and again, a reference to a section of the Internal Revenue Code. And basically the mindset is this person is running a business, and if they had been an employee of any other business, they would have qualified for leave. They've got the same circumstances in place, they're just self-employed, okay? But if they had been an employee of a business, they would have gotten leave in that situation. So the first step is to figure out the number of days that they would have received sick or family leave if they were an employee. We've got the same rules, category 1, 2, 3, 4, 5, and 6, okay? So we've got all that established. The change now is that we calculate average daily self-employed income. Guidance is iffy on this. Is this based on 2019 and a number from their 2019 tax return? Or is it the previous couple of months? I've seen it both ways. I don't have a definite answer yet for this. But it's going to be net earnings from self-employment. If we're taking a whole year of it, you divide it by 260 days, excluding weekends. Still have to apply the 67% limitation if they're in categories 4, 5, or 6. And any other limits you've got, $200 a day, etc. Total days of coverage, 60. But how do they get the credit? Well, my best suggestion is that if they're paying estimates, they pay less in their estimates. Because that's the best way to alleviate current cash concerns. If they pay all their estimates as usual, but weren't working for a chunk of the year, then my guess is they'll be able to claim the credit on their 2020 tax return. How it's going to happen, we don't know yet. Forms aren't in existence yet. So, but the best advice I can give for those with current cash crunches is that they reduce their estimate payments. And I'm happy to answer more questions on that because I'm certainly in a similar boat and have thought it through on my own behalf as well. So I'm certainly happy to talk more about that area. It's so specific to each person But I'll do one quick example. Nina runs her own small winery. She's a sole proprietor. Her daughter's school closed on April 5th, closed for 90 days. She is not able to work or telework. We've got her 2020 average self-employment income is $75,000. I mean, who knows if we can calculate January, February and extrapolate it out over 12 months or take the prior year. I mean, we certainly know that certain months of the year, seasonal businesses, it can really change the impact. So again, more guidance needs to be forthcoming for this. But for a very simplistic approach, her daily average is $288.46, which is 75,000 divided by 260 days. 67% of that, $193.27. So we've got that limitation. She's under $200 a day. She's affected 90 days, but limited to 60. Her credit is $11,596.20. Now, even when I worked through these examples, where's her health insurance? Where's her share of Medicare? You know, does she not need to pay Social Security on additional income? These are all unanswered questions right now because she's self-employed. So there's definitely more to come in this area. So how do we claim a credit? Well, you can claim it against quarterly payroll tax filings. This is for employers. We're back to employers now. So every quarter, the employers are going to have a 941 filed. Maybe their payroll company is going to do it or they're going to do it. But that's where they can say, hey, I've paid leave of $20,000 in total to qualifying employees. I want to get some of that back. That's for somebody who's been paying all of their federal tax deposits in advance. Okay, they've got cash into the payroll tax system, and now they want to get some of it back. If they need that money sooner and can't wait for their quarterly tax filing, they are allowed to reduce their deposits along the way. And it can be done without incurring a failure to deposit penalty, but they have to be paying the qualified leave wages at that time. Okay, there is a notice actually issued on this, notice 2020-22, and it's also addressed in the IRS frequently asked questions number 17. So if you have that concern of getting cash sooner, and this is an avenue you might pursue, please read through that and make sure that all the ducks are in a row before you take that step. And then they did create a new tax form, very pretty, we have over here. I think this is the fastest the tax form's ever been produced. Form 7200, advance payment of employer credits due to COVID-19. So this is completed when the credit is claimed, whether it's with a payroll tax filing or getting an advance credit, getting cash back, you know, as quickly as possible. And it's actually just faxed in, fax numbers right on the form. So it's kind of unique that the tax form can be filed just by faxing it. But that's what they've got in place for this form. But there's some record keeping that comes with this. We don't know yet what the backlog might be and how much, you know, if every person, every business that files this form is going to be asked for more information, or if it's going to be kind of a random audit situation, you know, random selection of people who claim the credit. But quarterly payroll tax returns need to be prepared and nice and clean and correct. You'll have the form 7200 that would be completed. Documentation of how those qualified health plan expenses were determined and how they were allocated to wages. So that example that I went through, you got to go through that reasonable method of allocating healthcare expenses. And then documentation to show how the amount of qualified sick and family leave wages were determined. And, you know, this includes records of work, telework, you know, this could be Pandora's box. I mean, a lot of documentation could be requested out of this. And this is certainly a big window of opportunity for some fraud that the IRS is concerned about. So I would just say that meticulous records need to be kept. you know, especially if a healthcare provider has been involved in the conversation, document all of that. And it did say very firmly documentation needs to be retained for at least 4 years. And that means that they've already thought about how big of a window they want to have to be able to revisit this. So it sounds like, you know, 4 years from now, somebody could be audited about whether or not they followed all the rules. So it's just something to plan for, make sure clean records are kept. And the accounting step, how this gets recorded. The full amount of the credit that is claimed, so that's the wages, sick leave wages, allocable health plan expenses, and the Medicare tax, is added back to income on the employer books. But the employer is still deducting their sick and family leave paid. They're still deducting their health plan expenses. They're still deducting the Medicare expense. And what it does is it washes out. Okay? So no expense, no income. They cancel each other out, basically. Okay? And that's the standard rule for getting a tax credit, that you can't get a dollar for dollar reduction in tax and then also take a deduction for the expense that generated the credit. Okay? That's considered double dipping. So here I have a couple frequently asked questions that I included verbatim because I do think they're hopefully helpful. The first one is, can an eligible employer get the tax credit for the qualified leave wages and get the employee retention credit under the CARES Act? Yes, but it just can't be for the same wages, okay? If anything is considered leave wages, that's only eligible for the credit we're talking about today. The employee retention credit needs to be for regular wages for employees that are actively working. Another question. So we have, you know, we have a long way to go in this situation. We don't know really how long it will take for everything to play out. You know, this act is designed to go through the end of December. So we've got it for the rest of the calendar year. And, you know, we may have people getting ill and going out on leave in the fall. We may have schools closed at any point in the fall, who knows? So we may still have people taking leave. And it may be that they were on leave through December 31st. We know we've got that 60-day limitation, right? So this is a new leave later in the year, okay? And they don't get the paycheck for that till after December 31st. Can that still be included? Well, yes. It's for a time period before the end of the year. If they physically just didn't receive their check, you know, you're on your 2-week pay schedule, and so those wages weren't technically paid until after, that's still included as long as it's for the period ending December 31st, 2020. Some things that I want to at least mention that are not part of this, you know, are separate pieces. You know, the economic injury disaster loans are a hot topic. Paycheck protection program, another hot topic. I did mention the employer retention credit. We've got the economic impact payments. I mean, there's a lot of other areas for relief to dive into. You know, this was just one of them. So there are definitely other areas that, if this one is not the one that provides relief, hopefully there are others. The resources I have here. So I have the Department of Labor, gets you right to the wage and hour division, Family Medical Leave Act, pandemic. So you're getting right to the section that's really going to dive into a lot of questions. We've got the IRS website that is really focused in on coronavirus tax relief, and it's going to direct you pretty well to what area you might want to dive into. The third link is Notice 2020-21. It's a really, it's not too much technical speak. It's not terrible to read. And then the fourth one is the actual bill from Congress. And I do want to acknowledge my sources. And you know, the IRS frequently asked questions is a really, really helpful resource. And again, I'm happy to send out that PDF to anyone that wants it. And this is a good time for questions.
Thanks, Liz. That was great. I know this is all rapidly unfolding, so we really appreciate you jumping in and doing one of these for us so quickly.
Sure.
I think you said it. I'm sorry. I was listening. I was wondering about the time frame. So you said it's through December 31st. Did you mention whether or not there are opportunities for this to be? I mean, this is an unknown, so this may continue into 2021.
Right. So I think, you know, I think they have a lot to think through for what does extend into 2021. Are there going to be, if they roll this credit forward, would there then be limitations? Is everybody's emergency leave clock reset, that they can take leave again? There's so many unanswered questions. And I do think that they have a lot to think about and figure out, because we just don't know how long this is going to be affecting businesses and how much assistance businesses will continue to need. So I do think it's going to be an ongoing conversation that, people are going to increasingly ask the question, well, what happens in 2021? Everything expires at the end of this year, but what happens after that?
Right. In terms of like finding, a partner to help you through this, I mean, I know certainly you'd be available to talk to folks, but for wineries who are, I don't know, doing this on their own or with a payroll company, like if you're working with a payroll company, are they supposed to be asking you these questions? I mean, whose responsibility is it to kind of like kick this off and make sure everything gets done and documented properly?
Oh, that's a great question. So I know the big ticket payroll companies like Paychex, they're hands-on with this. They've got a lot of resources in place, and they're trying to really help their clients. So I expect them to be bringing it up.
Mhm.
And then I would hope that any tax preparers that the wineries are working with, that they can talk to them and go through this conversation with them. I imagine, so I think if you go to the Department of Labor's website, they have that disclaimer that, wait times are longer than usual. So while that's a resource, that can be a tougher one to get through. So
Right.
I would say, do you talk to their tax preparer? Make sure that that and any payroll provider they're using are working together to maybe help them make the most out of this and not miss an opportunity. I haven't seen anything on deadlines to claim these credits. Is it that they've paid all these wages and then later on realize they're eligible for a credit? So hopefully, windows of opportunity aren't really being lost here.
Mhm.
And this will be ongoing relief, if it affects multiple employees over a spread of time, that it can still provide relief.
Great. Yeah, that makes sense. I think, I'll just do a couple housekeeping wrap up notes. If other folks have questions, we might have a couple of minutes left. So feel free to go ahead and enter in your questions. Liz, you are comfortable sharing a downloadable version of these slides. We can send the slide deck to folks along with this recording so that they can just click through to those links, right?
Yep.
Okay, perfect. And we have your contact information so that you are implying you're comfortable with taking some inquiries from folks afterwards with might be some specific questions, right?
Yep.
That would be amazing. Again, thank you so much. I don't see any other questions coming through right now, but that was fantastic. Thank you for all of the examples. And I'm sure you'll be hearing from some folks soon in the future. And thank you so much for your time today. We really appreciate it. It was great.
It was my pleasure, and thank you for those that listened in, and hopefully it was helpful in some small way, shape, or form. I appreciate it.
Definitely was. Thanks, everybody. Have a wonderful day. Take care.
Bye.